Hi everyone. In this international conference, let me introduce myself. My name is Bryan Wira Baswara. I'm from SBMITB. It's for School of Business and Management from Bandung Institute of Technology. With my title is How Behavioral Bias Could Impact Stock Investment Decision of Individual Among Indonesian Investor. With the contents is abstract, introduction, problem statement, literature review, hypothesis, methodology, result and findings, and conclusion and recommendation. With the abstract, is the study examined how behavioral bias affects stock investment decision among Indonesian investors in an emerging market context. It explored bias such as herding, anchoring, and overconfidence within behavioral finance. A quantitative survey using online questionnaire assessed the recognition of this bias among different demographic segments and their impact on investment behavior. Findings shows that limited knowledge of behavioral bias correlates with the higher prevalence of bias. Improving investor education is crucial to reducing this bias. The study recommends educational programs, regulatory frameworks, and technology solutions like robo-advisor to mitigate bias influence. This research enhances understanding of behavioral finance in Indonesia and offers practical measures to improve investor decision and the financial landscape. The introduction. Investment is one of the essence of economics with the expectation to achieve profit in the future from putting money into shares or property could be defined as investing. It's quote from Huang and Feng Licheng from 2010. Investor rational thinking is difficult to fulfill because investor will involve risk and uncertainty when making decision. Hence, the investment decision maker will not involve rational and logical consideration as their aspect, but also psychological aspect, which lead to their intuition as one of the aspects of leading. Behavioral finance is related to investment decision making, which studies understanding investor behavior while making decisions based on psychological factors. Based on Sukmala, Jamal, and Chandra from 2020, conclude that behavioral finance appears due to stock exchange anomalies. From example, the extreme increase or decrease of stock in the stock exchange. Many investors are influenced by their psychological bias. Investors are influenced by their behavioral factors that impact their decision making. These are herding market prospect and overconfidence to Gambler's fallacy and anchoring ability bias based on Puok, Duan and Ha from 2011. Each investor make a decision based on the received information. Behavioral factors become important in the financial market due to investor could influence to make the financial decision from Marchand and Dus 2012. From the problem statement itself, Indonesia, despite more people investing in abundant market data, there remains a significant gap in investment return. This gap is mainly due to behavioral finance, where psychological factors like overconfidence, herding, anchoring, and regret aversion impact decision, which leading to poor financial choices. This dissertation explore this bias effects on Indonesian investor and propose solution to mitigate their impact, considering the diverse demographics of market participation. And for the objective, this study explore how understanding behavioral bias affects the number of bias Indonesian investor experience in their decision. It focused on 7 bias: anchoring, representativeness, overconfidence, herding, cognitive dissonance, regret aversion, as gambler's fallacy. The study aims to identify the most common bias among Indonesian investors, examine their variation across different demographic groups such as age, gender, and occupation. It also investigates the potential strategy in education, regulation, and technology to help Indonesian investors overcome or reduce the influence of this bias. The literature review from 2.1 behavioral finance. According to Mukti, Kataria, and Joshi from 2019, behavioral finance integrates finance, psychology, and sociology. Economists study rational and irrational decision making. Sociology focus on social environments, and psychology examine behavioral bias. And 2.2, behavioral bias in investment decision making. Behavioral bias significantly impact investment decision, causing irrational action due to cognitive and emotional influence. Key bias includes overconfidence leading to poor decision and excessive trading. From 2.3, behavioral bias and the Indonesian stock market. The rapid growth of individual investor in Indonesia, with SID cards rising from 2.48 million to 4.16 million, is driven by technology and fintech, especially during COVID-19 pandemic. With my hypothesis, the hypothesis first or H1 states that investors with limited understanding of behavioral bias are more likely to experience a greater number of this bias in their investment decision. With my null hypothesis is that the understanding of behavioral bias does not affect the number of bias investing report experiencing. With my dependent variable is understanding of the influence of behavioral bias. With my independent variable is number of behavioral bias experience. With my methodology is using the data collection, data sampling, and data analysis. With the data analysis, I'm using the SPSS software to test the hypothesis related to the first research question. And it will be imported to the Excel and then inputted to the SPSS for chi-square analysis using one dependent and one independent variable. And my result and findings in analyzing investor demographics, notable differences emerge between Indonesian and international respondents. Among 89 Indonesian investors, 58% are women and 42% are men, while 56 international investors shows a majority of 57% of men and 43% of women, indicating cultural and market condition influences. Indonesian investors are mainly aged 28 until 43, suggesting more experience, whereas 71.4% of international investors are aged 17 until 27, reflecting the different risk tolerance and investment approach. Educational background also differ. 48.1% of Indonesian investors hold a bachelor degree, while Indonesian international investors are more diverse, with 72.2% holding a bachelor and notable percentage with master degrees. Employment status varies as well, with Indonesian investors primarily being entrepreneurs, 46.1%, and private sector employees, 33.7%, whereas nearly 50% of the international investors are employed or students. Geographically, Indonesian investors are mainly from DKI, Jakarta, West Java, and Banten, while international investors are mostly from Asia and Europe, with significant number from Malaysia, Qatar, and European countries. Okay. Uh, the data analysis addressed this question: how does understanding behavioral bias affect the number of bias Indonesian investor face when choosing stock investment? Results show a statistically a significant relationship. Investor with lower awareness report more bias, supporting the alternative hypothesis. Most respondents who reported experiencing many bias, 4 until 7, had low awareness, 42 out of 51. Those reporting fewer bias, 1 until 3, also had varied but predominantly low awareness. This indicates that the lower awareness correlates with the higher number of reported bias, suggesting this investor struggles with the bias mitigation. While the chi-square test is statistically significant, caution is warranted due to small expected counts in some cells, which may affect result reliability. And also with this question from the 7 behavioral bias above, usually what kind of behavioral bias that likely to affect you in choosing investment decision? This questionnaire result shows that overconfidence, gambler's fallacy, and herding bias are most common among Indonesian investors, reported by 73, and 69.7% of the respondents, respectively. This bias significantly influences their decision making. Overconfidence leads investors to take greater risk to trade through frequently, while gambler's fallacy involves the mistaken belief that the past event affect future possibility. And also, this study highlight that needs the strategy to mitigate behavioral bias, which benefit individual investor, financial advisor, investment platform, and regulatory bodies. Key strategies include leveraging technology through social platform and robo-advisor. The survey shows that most Indonesian investors do not invest internationally, with 51.7% avoiding global market. In contrast, international investors tend to diversify more with significant investment in both emerging and developed markets. This diversification helps manage risk and potentially enhance returns. In conclusion, addressing behavioral bias through technology and education can improve investment decision making. Promoting international diversification can help investor manage risk and achieve better outcomes, benefiting the overall financial landscape. And for the conclusion and recommendation, this is a dissertation on the impact of behavioral bias on stock investment decision in Indonesia, highlights how this bias shape investor behavior. It confirms that unexpected bias persistently influence decision making. This study also emphasized the needs for enhanced education to mitigate these strategies. These strategies such as diversification, educational programs, and technology, including robo-advisor, can help reduce bias judgment. Financial institution and regulatory should implement educational initiatives such as national financial literacy programs in school and ongoing seminars for current investor. Robo-advisor should include personalized modules to address behavioral bias effectively. This dissertation also recommends stringent regulation to prevent financial institutions from exploiting bias and suggests using technology for data-driven investment management and bias detection. Social media platform could integrate trading with real-time feedback and educational tips to alert investors to potential bias. Okay, that's all for me for my presentation in international conference. Thank you.